The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Welcome everyone to the Sirius Report Market Wrap-Up for Thursday, September 26th, 2024. My name is Ken Shorgen, and we're going to take a look at some of the economic data that cropped up today. Of course, we got GDP final numbers. We've got to take a look at jobs and sort of the dichotomy that the BLS as well as the actual real job market are showing in opposition to one another. We're going to take a look at the bond markets, how the 7-year auction took place, and we will see how the markets went gaga goo goo, cuckoo for Cocoa Puffs over China doing a little bit of stimulus in their own economy. So with that being said, let's go ahead and jump right in and see how the markets fared. Well, the Dow was up 260 points, closing out the trading day at 42,175. The S&P 500 was up 23 to 57.45, and the NASDAQ, new all-time high, up 108 points to 18,190. Meanwhile, as I mentioned, China goes all out, at least according to Western analysts, as Xi vows fiscal stimulus to save the private economy, stabilize real estate, and boost stock markets. China vowed to save the private economy, yada yada, just repeat that, according to a readout from the Politburo meeting on Thursday. It is necessary to help enterprises tide over difficulties, said the readout, which was released just after 1 p.m. Now, the primary thing is the money is not going to the central bank, interest rates aren't falling down, etc. The money is going to the banking system itself, which is then expected to lower rates and lend out to stimulate the economy organically, and of course the housing market. The question then becomes, how much is necessary? Well, since the whole global economy is so interwoven these days, with the one caveat that the multipolar world, the global south, is detaching itself slowly but surely from dollarization, and the unipolar world, this is where things get dicey. And a lot of it has to do with the derivatives that Western investment firms put in their purchases of Chinese securities, Chinese commodities, and into Chinese interests. But the reality is China doesn't fully impact the West unless they do something extraordinary like they did in 2008 when they were part of the bailout that saved the U.S. during the global financial crisis. So there is a slowdown in China's economy, but it is not as drastic as the Western analysts want us to think. And in fact, it's going to affect the West a lot less than, say, when Powell last week lowered interest rates. So we're going to see how that goes. But the fact of the matter is, we do have some different sectors of the market that were stimulated more than others. And one of those, of course, is the bond markets. Yields shot up everywhere except in the 30-year. The 2-year was up, 0.074% to 3.627. The 20-year was up, or I should say the 10-year was up 0.015 to 3796. So that has the inversion between those two is not steepening as much as it was last week with the Fed announcement. And interestingly enough, the 7-year was up 0.023% after an auction. Now, the auction was considered solid, about a BB+, but there was a drop in foreign buyers, which means that the Fed is pretty much monetizing it through their primary dealers. Why that would lead to the yield spiking? Well, the fact of the matter is that all the yields are going to start spiking as the Fed starts doing cuts, because real inflation was never really tackled and quelled by the central bank. And instead, we're going to see, as rates get lowered and money gets cheaper and purchasing power gets devalued, inflation is going to get higher, and it's going to get higher relatively quickly. In the dollar markets, well, after 2 days of moving back up towards 101, we had a sell-off of the dollar. Dollar was down 35 cents to close out the day at 100.56 on the DXY against a basket of primarily Western currencies. In the gold markets, interestingly, when China came out with this news, both gold and silver spiked immensely. And then there was some profit taking, but throughout the day, the COMEX had to do a huge number of shorting to try to keep silver, especially, from getting up towards the 33 handle. Gold ended up the day up $16.80 to $26.7450 with a high of $26.85. And silver was up 22 cents to $32.08, but at one time it had a high of $32.77. In the crypto markets, last 24 hours of trading, Bitcoin is up 2.53% to 64,740 with a high of 65,793, while Ethereum was up 2.39% to 2641. Well, the oil markets have 2 straight days of sell-offs, as the belief in the energy markets is that there is less energy needed because the world is going into recession. WTI crude was down $2.02 to $67.67. That was WTI, while Brent crude was down $2.07 to $71.39. And this is the expectation that things should actually get rougher. We've got 2 things coalescing right now that could potentially be detriments to one political party, the party currently in power for the election coming up in about 6 weeks, and something in California with Governor Newsom is sure not to help it. Newsom signs bill restricting California oil and gas operations. On September 25th, Governor Gavin Newsom from California signed a series of bills into law that limit oil and gas operations across the state, prompting criticism from a member of the fossil fuel industry who says the measures will lead to higher costs, as if California doesn't have higher costs to begin with. The 3 bills are aimed at protecting public health and wildlife and empowering local communities to set greater protections around oil and gas activities in their neighborhoods. Well, since we really haven't had a new refinery in going on 40 to 50 years, especially not one in California, and when it comes to protecting public health, how are those wildfires going? Because you don't bother to even deal with your own forestry. The whole thing is a sham, and instead is pretty much the ideology of the Green New Deal and ESG, which, as we know from much of Wall Street, they are bailing from that as quickly as possible. Sadly, Governor Newsom in California didn't get the memo. Well, initial jobless claims dropped back to near multi-decade lows. Go figure, we've got unemployment going up. We have news from corporations laying off people by the hundreds, if not thousands, and yet initial jobless claims are at multi-decade lows. Just a week after the Fed slashed rates by crisis like 50 basis points, initial jobless claims tumbled back towards multi-decade lows, which is interesting because are we going to see some magical, mystical jobs report going into October that is going to belay the 817,000 that they revised last month? That's a great question. Or better yet, maybe they're not even counting these individuals in the job market. Now, the reason I said earlier that there was a dichotomy between this is we have the initial jobless claims of multi-decade lows on the same day that Disney is going to lay off several hundred white-collar workers and facing other cuts, especially to their theme parks and some of their other workers. According to sources cited by Deadline, Disney is pushing ahead with new layoffs as part of a broader cost-saving initiative, with about 300 employees across Disney's corporate divisions being impacted this week. The layoffs of 300 employees began on Tuesday and will continue through the rest of the week. But interestingly enough, where they're losing a ton of money in some of their IPs like Star Wars, Marvel, etc., they're not doing anything. That's where they need to really make the cuts, because they haven't had a profitable movie outside of Deadpool in about 4 to 5 years, or go back to 2019 and Avengers Endgame. Well, the final Q2 GDP beats estimates on inventory. Government boost second half is revised lower. Nobody will care about today's final revision of the Q2 GDP print, for the simple reason that the quarter ended almost exactly 3 months ago, which is a given. And from a fundamental standpoint, the only number that matters now is the third quarter, which will be unveiled in a couple weeks. What matters more is that, noted last night, today's annual update from the National Economic Accounts, which include the National Income and Product Accounts and the Industry Economic Accounts, IEAs. The update includes revised estimates for the first quarter of 2019 through the first quarter of 2024 and resultant revisions of GDP, GDP by industry, GDI, and other major components. Now think about that. Ever since this administration has come into office, they've had to revise all their numbers going back to the first quarter. Well, that was still a Trump year, but going back to the first quarter of 2019. Can anybody accept or trust any economic data coming from the government? Well, we have pending home sales limp off all-time record lows in August. Despite tumbling mortgage rates and surging mortgage applications, pending home sales in the U.S. rose just 0.6 month over month in August, less than 1% that was expected, and a big jump from the 5.5% to the negative in July. Pending home sales were down 4.3% year over year and have not been positive since before the pandemic hit. Well, in his first post-rate cut speech, Fed chairman makes zero comment on monetary policy. And this is sort of a carryover from his FOMC speech last week, where he did not really say, he gave the normal, usual Fed speak of not saying anything. And in this case, it sort of, well, what's the term I want to use? It exemplifies the fact that the Fed is completely, they've lost control of monetary policy. They have no idea what they're doing. They waited too long to first start raising rates, and then they waited too long to stop doing QE to infinity, and they kept bailing out the banks despite the fact that the banks have not stopped investing in derivatives and other things that have made them polluted and corrupt. And so Powell, really, there's nothing he can do. And it doesn't matter whoever comes into office starting in January of next year. The U.S. economy and the U.S. financial system is completely screwed. And there's really only one thing potentially that they could do to right the ship. But no politician in his right mind will ever do this. And that, of course, is to default on the debt, to pretty much allow the stock markets and equity markets to tumble, collapse, for housing prices to collapse, to get rid of all the toxicity that's in the financial system, and then rebuild from scratch. To do that, of course, they would the United States would probably find themselves at the bottom of the top 10 when it comes to economic output. And like I said, no politician has the stomach to do that. They only are more than happy to spend money that they don't have and leave it for a further generation to deal with. Well, as I mentioned, there is one or two significant things of a similar note that could potentially have potentially have an effect on the upcoming election. And that is dealing with the supply chains and the ports. First, Hurricane Helene is coming in the Gulf, on the Gulf side of the Florida, is expected to be extraordinarily severe, taking at least 2 months to deal with the consequences of it on the port side. And we have the potential of a ongoing strike taking place in the eastern seaboard, New York, and some of the major ports, which will spill down through the entire eastern seaboard and maybe even to California. And we don't even have the lockdowns to make excuses for doing that. If that happens, the economy is going to tank, and whoever is in office when that happens, we know what the end picture is. Anyway, I want to thank everybody as always for stopping by on this Thursday to get your market wrap up for September 26th, 2024. Paul and I will be doing a couple podcasts tomorrow, so we'll have those out as well, either tomorrow or Saturday and Sunday, depending on when we get them edited. So look forward to that. And I want to thank everybody as always for being a part of this great community. Don't forget to subscribe, like, share, comment, and pass this on if you think it's of importance to somebody else. And until the next time we get together, have a great Thursday.